Hello and welcome back to Chartbusters. Well, as promised, we're going to be focusing on one stock. You know, HIL Industries. Just pull up the last 1 month chart. The stock has been on absolute fire, and in the last few days, post its numbers as well, the stock has seen a big rally. But we want to understand what's the way ahead from here on, and in fact, what's the outlook. To help us out with all those details, well, we have the MD and CEO, Mr. Dhirup Choudhary, who joins us on the show. Hi, Mr. Choudhary. Pleasure talking to you as always. Congratulations on a solid showing. Well, you know, every time we think that the numbers have already peaked out, but on a high base as well, you managed to outperform. This time around, though, it came in from the erstwhile, you know, the roofing business. So give us a couple of details out there. You've done more than 400 crores in a single quarter. What was the market share gain, if you could quantify it? And also give us a sense in terms of the price hikes that you've taken in the past quarter. Please go ahead.
Thank you, and good morning to the viewers. Nigel, yes, it has been a dream quarter for us, and I think a lot of planning and execution has gone behind this. We have definitely gained good 2 to 3% market share differential over the last market share that we had. We would be hovering around 24% market share at the moment as the leaders in this industry. And this has come with good price rise as well. About 5% to 7% rise is what we have seen in Q1 versus Q4 of last year. So good, solid performance from the tonnage delivery, from the revenue, and from the profitability.
Right. So in terms of a quarterly run rate, does this 400 plus crore mark sustains? And on your Parador business, last year you did just shy of that 1500 crore mark. It declined by about 3%. What's the outlook for that business?
So Q1 is the best quarter for roofing, and it's very difficult to sustain that rate going forward for the other quarters. But Q4 again becomes a very good. So it's always a cyclic pattern that we have in roofing. So we definitely foresee that Q2 and Q3 will be weak when compared to Q1, more so because we had a very good pent-up demand last year. And even to catch up with those numbers are going to be significant contribution from the team, but we are confident of that. Parador, yes, Parador has seen a bit of a headwind, and I had announced this last time as well, because there's a severe material crisis. So availability of key raw materials, HDF, MDF, chemicals, and their prices have shot through the roof. Even the sea freights have shot through the roof. So Parador is going through a bit of a constraint in pushing their revenues up, but we have grown. We have grown about 18% over last year, Q1. And we hope that all actions that we are taking, growing into newer markets in Parador, will reap us good value during the year. But this year will remain challenging till we sort out the material issue.
Mr. Choudhary, you know what Mangala meant was Q2 and Q3. Will they be better than normal Q2 and Q3? As you said, it's seasonally weak. But given the kind of demand that we have seen, do you expect it to be you know, better than the normal weak season?
So from our order booking status, we're doing extremely good. It's all about material availability. We are trying to sort that out.
Okay, got it. All right. And also in terms of Parador, what kind of a revenue guidance can you look at? You had mentioned last time around there was some kind of raw material you know, headwind that you're facing. It's evident in the past quarter as well. When do we see normalized performance coming in for Parador? And we need to ask you that. What's the number in terms of revenue you can deliver for FY22 from Parador?
Parador consistently will deliver. Our plans are to take Parador. When we picked up Parador about a year and a half back, it was about 140 million. Our aim is to take this to 350 million in the next 4 to 5 years. So consistent drive in market acquisitions, joint ventures in United States, China, and looking into newer markets, Nordic countries, Spain, France, UK. All of that drives are in place. I think this material availability issue will get sorted in a quarter's time, and then you would see a complete ramp up. Parador, let's say 10% plus growth is something that we are targeting in the immediate future, and then we will ramp it up further as we go.
All right, so around 1650 crores in this year, and thereafter we will see a ramp up as you promised, Mr. Choudhary. Let's talk about pipes and putty as well. You know, you had a target of close around 400 crore in terms of sales coming in the years to come. What is it standing at right now? What's the outlook for this year? And when does that 400 crore mark come by?
So as we speak, the target has been revised. The target now is 1,000 crore in the next 5 to 6 years for pipes. And we are absolutely on track for that. We did about 200 crore plus last year, and we hope to have a consistent performance on this. 53% was the growth last year. This year also, we hope to catch up with at least a 40% growth, if not more, and take that spree. A lot of SKUs are getting added to the business. 400 crore was objectively possible from the same capex, but we will continue to add capex in this business.
Okay, all right. And you said last year the pipes business revenue was?
Grew by 53%, 200 crore.
200 crore. All right. So this year you'll be around 280 to around 300 crores.
Correct, and more.
All right. And you're making more money now. You know, you have been stressing on the point that the high cost India debt, you'll be looking at repaying it. You have done that. In the past quarter, you've mentioned that there's no high cost debt in India, which is quite a feat, because I remember a few years ago, the markets were a little bit nervous with the kind of debt that you had in your books. What do you do now? You have more money, that will be available. What is your capex for FY22? And are you getting adventurous again? Is there some acquisition on the cards or something new that you're looking at?
Look, we'll be dead if we don't be adventurous. But adventurous, not at the extent of the investors. So we are extremely conscious of profitable growth, and we will continue to do that. We have absolutely no M&A at the moment that is planned, but you'll get to hear as soon as that happens. But we are going to use our cash very, very progressively. Q1, we have already reached a stage where entire debt that was taken for Parador for 7 years has been cleared off in 2.5 years. So in India. So that's a great substantial cash flow that we have generated. The capex this year should be about 125-30 crore, which includes an 80 crore of a new line for building materials that we are setting in East, which we have already announced. Parador should invest about 5.5 million euro this year on capex. This includes the maintenance capex. So all of that should come from the cash flow. There could be some working capital loan that we need to take in Q2, Q3, because these are weak quarters for us, but we will make it up for the year.
All right, good on you, Mr. Choudhary. Be adventurous, but not at the cost of shareholders, is what you said. We will hold you on to the guidance that you've given. The street has liked your numbers, and we've seen a big move in the stock price as well. That's just about today, but the last few months have been rather strong for HIL. With that, we'll slip into a short break, but on the other side, we get chatting with a couple of